All right, welcome to the financial update for January 16th. Let's go ahead and get started because I respect your time. All right, so here's the major financial news over the past week or two. Starting with number one, the economic growth insights. So GDP continues to increase, seen revised numbers today through 2027 that indicate greater than 2% GDP growth in the United States. So with the recent job numbers, the recent CPI, PPI that we'll get to, it seems feasible. The unemployment rate is steady, just above 4%. And as of lately, there have been a lot of companies announcing layoffs, including Amazon today, Meta, or Facebook. I'm sure Tesla's coming. They just lowered prices for their Cybertruck. So that unemployment rate I expect to see climb slightly here in the next quarter to 2 quarters. So pay close attention to that. For inflation trends, with the CPI and PPI that just came out, everybody's bullish that inflation has been tamed. However, we have sticky inflation. Some call it stagflation right now. Uh, the Fed's policy is to maintain employment and to try to hover around the inflation target of 2%. Jerome Powell has a difficult job right now, as most of you know, because the new administration is coming in. There's going to be heavy pressure to lower rates. However, the market is not fooled. That's why rates and mortgage rates right now are at almost 10-year highs. Consumer spending seemed to pick up over the holidays. Keep a close eye on that. Remember, the consumer is driving the economy. So without heavy consumer spending, we could see a fall off after Q1. For interest rate outlooks, this has been a big play. A lot of folks playing TLT, TMF. There are a couple risk factors here. One, we need to see consistent inflation data. With this week's CPI and PPI, some may consider it an inflection point to the downside. However, new administration comes in, there's a potential for tariffs. Tariffs are going to increase prices. An example is in 2016, Trump imposed a tax on washers, just an example, and washer prices spiked by 12%, including dryers as well. So companies are going to pass on these costs to the consumer, so you have to pay close attention. I would say it's a little bit too early for a TLT, TMF play. However, DCAing in at this point is on my radar. For stock market performance, we kind of just bounced off our trend line. We'll go to the charts later. Housing market dynamics, number 7. Housing prices right now, they remain high. 30-year interest rate, 30-year fixed mortgage interest rates are hovering around 7%. It's a tough market right now. With the wildfires in California potentially driving up prices on the West Coast, you're going to have to pay close attention right now. It's tough to make a prediction what's going to happen in the next 6 months. Our trade balance in the U.S. continues to rise. Outgoing administration, with support for the wars going on around the world, we've printed a lot of money lately, and that could be driving the sticky inflation, as well as federal budget deficits. Corporate earnings, banks just rolled out this week with the top banks kind of blowing out numbers, and the new administration will be laxing regulations. So it's going to be interesting to see this earnings season. I'll provide another update once we see the other major players come in, especially the Mag 7. But banks have so far, they've crushed it. CPI came in. Everybody's cheering on this indicator. You need to be very careful. Right, with CPI at 2.9%, yes, it was below the analyst expectation. The core CPI, we usually exclude that. That decreased down to 3.2%. But across the board, if you've been paying close attention, getting below this 3% level is very difficult. It's going to be very difficult for the Fed. They're in a tight spot right now. If you see unemployment tick up and inflation stay stagnant, they're going to be, quote unquote, in between a rock and a hard place. So I wouldn't get over exuberant right now. Just from the one data point, we're going to need to see the reports from next month in February when the administration takes hold, and we'll see what happens with tariffs. We are expecting tariffs across the board. Too early to tell right now. We'll have an update next week when the new administration takes over. But you could see a spike in inflation. Analyzing that though, if tariffs come in, the one thing to analyze, it's not going to be steady inflation. So if tariffs are enacted, you will see a spike, and that could be a potential, 1 or 2 month spike in inflation. But those prices will then stay stagnant or they will decrease. It's very rare to see inflation consistently rising with just tariffs. It might just be a one-time report, so we're going to pay close attention to that. That's why I said before, analyzing TLT, TMF, those type of plays, I would be very cautious at this point. PPI seen a modest increase. Again, it was below analyst expectations. That's why there's been a spike in the market lately in the NASDAQ, in the Dow. Again, keeping a close eye on these reports. These may be a one-off with the new administration coming in, as I previously said. Employment data is a big one. So the economy blew out the job numbers and added 256,000 jobs, well above the estimates, mainly in healthcare. Some government jobs added. Over the past year, one of the large leaders of adding jobs has been government. With the new administration coming in, the Elon Musk Doge. So it's going to be pivotal to pay attention to these reports. The unemployment rate is also another indicator that the Fed will likely, at the end of this month, pause on interest rates. The market is predicting a summer interest rate cut. However, these reports are going to be critical in determining if we're going to raise interest rates or lower interest rates. So everybody's very data dependent right now, as is the Fed. So just paying close attention, react, don't predict. Another good saying is, if it's in the press, it's in the price. That's why when you see these reports come out, you can see a fluctuation in the major indices or the interest rates, sometimes 1, 2, 3% in a single day, as we just seen yesterday. Mortgage rates, right? As a real estate investor myself, right now is a tough time unless you have cash on the sideline and you're ready to make an offer. With 30-year 7% interest rates, it's almost insanity to try to buy a large property right now. Some folks, they have a family, they don't have a choice. It's a very challenging market right now for all the realtors that got in the market during COVID. I feel for these folks, but turning houses right now is just, it's going to be real tough. So we'll see what happens over the next 6 months to a year. Could be a potential correction. It's too early to tell based on interest rates. Stock market performance, we'll get to the charts here in a second. But the recent data with the CPI, PPI drove markets higher. It drove interest rates slightly down, and we'll look at those charts here again shortly. The bank earnings, they crushed it. JP Morgan, Citi, Wells Fargo, Goldman Sachs, tons of cash flow. Even after the election, I remember JP Morgan just flying 10%. So if you're looking to get into these stocks now, again, we'll analyze them here at the end of the presentation, but be very careful. They do trade at lower valuations. Their PE ratios are usually in the single digits or low double digits. They may seem like a bargain. However, I would be cautious. The dollar continues to strengthen. When the dollar rises, this American exceptionalism right now, it does drive rates higher. So pay close attention to that. There could be an inflection point coming soon. Again, we'll pay close attention to the strengthening U.S. dollar as it affects interest rates in the market. Crypto, there's a lot going on in the crypto world right now, especially with XRP. So the SEC late last night filed the repeal to Ripple, the parent company of XRP. The price dropped, dipped down about 10% on this news. However, spiked right back up and is now hovering around $3.30. Very interesting to watch. Very volatile. There's a lot of good news on the horizon, especially with the new administration. So I expect a more in-depth update next week. But pay close attention. XRP, Solana, Bitcoin, Ethereum. They run up a lot. Bitcoin rising about 50, 60% since the election. XRP up 200%, Solana up a couple 100% as well. So very volatile, kind of a high point right now. However, it is very bullish on the price action. California wildfires, it's extremely sad to see what these families are going through. The insurance companies pulled out of California several months ago, which should have been a warning sign to most. Unfortunately, there's nothing you can do when you're a homeowner and your insurer drops you, similar to hurricane insurance in Florida and the East Coast. However, this is going to take years to build. From an investment perspective, which companies are going to be able to come in here and build these multi-million-dollar properties? I know Toll Brothers is a favorite. However, this is not a turnaround type play with Toll Brothers selling off recently. This is going to take 4 or 5, even 10 years to rebuild these communities, and it's very sad what's going on. But we pay close attention to this, and the government's going to have to put together, Congress is going to have to put together a package here to help some of these homeowners. There's several stocks that are on my radar right now, and for valuation purposes, the market is drifting towards all-time highs again. Just recently took a 5% dip, but we're going to go to the charts here in a second. I want to discuss JD, BIDU, Baba, and Alibaba, and Barrick's Gold. Very controversial, very beaten down, low PEs. Some of you who follow Michael Burry, with the exception of gold, has all of these in his portfolio. He also has hedges against them on his recent 13F filing. So let's get into some of these metrics. JD, right, large online retailer, logistics. Some of the metrics that catch my eye are a PE ratio of 10.4. They do have a 2.2% dividend yield, strong revenues, strong net income, and we expect earnings per share this year to stay consistent. While I talk about these types of stocks, and I'll show you in the charts, we recently had news out of China of a large $1 trillion stimulus package to support the market with the housing crisis that's been ongoing for the past 4 years. So these are trading at bargain values, in my opinion. And if you're a long-term investor, you're going to hold more than 1 or 2 years. This is why we're looking at these stocks. Same thing with Baba. It's got a forward P 8.95. They do have a small dividend, strong net income, strong revenue. Stock price has been beaten down, shot up, now back down based on the stimulus news. Analysts are expecting, I would say, at a floor $113 price target, but we'll look at the charts. BIDU, another one, they're getting into the artificial intelligence world. They have Tesla as a customer. They have a 9.42 price to earnings ratio, 8.96. These valuations are almost half or a third of what the large U.S. tech companies are reporting right now. So, and Barrick's Gold, right? So the few of the two key players are Newmont Gold, Barrick's Gold. If you've been following Barrick's Gold right now, they have a situation going on with their Mali mine. The government, military ran government, has just extracted $250 million of gold. The company is now shutting down that facility. Analysts are expecting about a 10% correction on the stock. So a lot of analysts are lowering their price target to around the $20 US dollar range right now. To be on the safe side, $19 is a fair estimate. Again, forward P 16.5. Gold hovering above $2,700 right now. Most expecting this to go to $3,000, as am I. Little disclaimer before we get into the charts. This information is for entertainment and informational purposes only. I am not a financial advisor. I do not work in finance. This is my own opinion for educational purposes only. Let's get into the charts. All right, I'm using Webull, not sponsored. I just like their charts, like their desktop app. TD Ameritrade's another favorite. So let's go we're looking at Barrick's Gold right now. All right, so gold spiked up over the past 2 years. Barrick's Gold got up to about $21.23. You have a huge gap to fill right here, right? It's bouncing off the $15 line right here, $15.11. right? I got in back here before earnings, shot up. Recent news with the Mali mine. The another reason why gold is falling off right now between Newmont and for Barracks is the labor costs are rising as well. Inflation's driving labor costs as well as driving the price of gold. So the next earnings report is going to provide clarity on what exactly is going on with the Mali situation. How much is that going to affect the balance sheet? How much are they profiting off of the rise of gold? But right now, it looks like it's forming a base right here. Is it too late to get in? Running up to 1580. I would say, I've been DCAing in, holding on tight. We have a large gap to fill right here, even back to the 1739. If you have good earnings, I think this Mali situation is going to affect next earnings and potentially the 6 months earnings. So leading up into earnings, I plan on hedging my position with some shorts just to protect the downside risk. Another note is back in 2020, Warren Buffett normally doesn't buy gold or gold stocks. However, during the COVID crisis, he did buy Barrick's gold. The price, let's zoom out to the 5-year, the price did shoot up to 28.12. So if you see any type of recession risks on the horizon, runaway inflation, and you want to hedge your portfolio, gold is one of those asset classes. And now Bitcoin is now super popular. However, the market cap of gold and the central banks around the world buying gold, regardless, in a bear market, you may see Bitcoin drop 50%. To see a company like Barrick's Gold drop 50%, it would be a very rare event. So, in my opinion, it's a slight hedge against my portfolio right now. I think the company is fairly valued, and it has a lot of room and potential to run. Let's go to JD. Again, one of Michael Burry's favorites. So JD, since the 2020, we'll call it a bubble with all the money printing around the world, shot up to $101, is now trading at 35. So pay close attention right here. Back in September, the government of China announced that they would be enacting a very strong stimulus package. However, first they bailed out the local governments, and what you're seeing right here is the fate of that news. So they didn't come through with the large stimulus package that everybody was expecting. So you're seeing the stock run off right here, settling down between 30. Let's go to the 1 month. So it got all the way down to 32.78, bouncing off that. And I expect another gap fill, at least in the meantime. The news that you have to pay close attention to here is when the new administration comes in, how strict are the tariffs going to be on China? I'm expecting 20% right up front, affecting companies more so like Pinduoduo, PDD stock, right? They export a lot of stuff via the Temu website to America. And that's why these companies right now are front running a lot of their inventory prior to the new administration taking over. JD doesn't have too much U.S. exposure. They do have a global business, logistics, and online retail. So pay close attention to this one. If you see that stimulus package come through, you'll likely see another run up overnight. They can announce it over a weekend, but to short this right now is very, very dangerous, because if that stimulus package gets announced immediately after the tariffs are imposed, you're going to get squeezed out. I think with this valuation, potentially building a long position right here is what I'm doing. What Michael Burry is doing, he's hedging his position. So Michael Burry owned the stocks prior to the stimulus, hedged right here. His hedges are working out very well. And now we wait to see what's going on with the tariffs. Let's go down to Alibaba, another favorite of a lot of investors. So during Corona, let's see what this ran up to. It ran to 308, definitely overvalued at that point. Came down, got as low as 56.03 down there in 2022. Again, same thing with JD. Stimulus news spikes up to 117 and then falls off a cliff right there. Now you're at the support zone between $70 and $80. hovering around here until you hear more about the tariffs and the stimulus. So again, very dangerous to short. You could say almost very dangerous to have calls right now. However, if you're betting on this long stimulus package, it might be a good opportunity. And these three stocks, BIDU, JD, PDD, their charts all look somewhat similar. BIDU has been getting beat up, I think, the most, and cannot get past this $90 range. Spiked up back in September to around 120, 122, and then fell off a cliff just like the other one. So again, same thing. If you believe that there's going to be a large stimulus package, they're going to print a ton of money, inject it into the economy, you should see these rise 5-10% overnight and then continue to climb. Could be something similar that we've seen in the past during the great financial crisis. They did the same thing. They print it. So right here, 2008, roll the money printer. Baidu goes from $13 and then 3 years later, about an 8x up to 80. Similar in COVID. Right, COVID happens 2020. It goes from it's a basic almost triple from here, double to 354. Of course, likely bubble territory there. Now, if you're a long-term investor, you want a stock that's cheap, a lot of runway, $28 billion, tech company trading at a 9.23 forecasted forward PE ratio. So let's now look at TLT and TMF. All right, TLT. So why would you buy TLT? Long-term treasury bonds, 20 plus years. So when you enter a recession or in years past when the government has cut interest rates, you usually see the price of TLT rise because those longer-term interest rates, folks want to lock those in right now, get 4, 5, 6% interest on your money on an annual basis. And then for the more riskier play, you got the 3-time leverage, the TMF, right? So during COVID, government rolled the money printer, interest rates went down to zero. This triple leverage ran up to 530. However, if you're thinking right now, okay, well, we go into a recession, government drops rates down to zero, this should shoot right back up to the 500s. Well, this triple leverage play has decay. It does provide a dividend. I would expect if that scenario happened, which is at this point looking more and more unlikely, if the government did go to 0% interest rates, started rolling the money printer, you'll probably see this accumulate right here at the 270, $300 level, and right now maybe a good potential to add. Just over the last CPI and PPI, the stock popped 5%. You can see it right here. Popped right up from 36 or 35 to almost 40 now. It's up 2% today. So a lot of folks are betting on interest rates coming down, and time will tell. This is a very risky play, but if you like TLT, you're a bit more risky. TMF, and then the opposite of TMF is TMV. So this is the bear fund. Again, basically what TMF is doing, this is going to do the inverse. So we'll pay close attention to these plays, very high risk. But if you want to hedge your portfolio, here's a good hedge right here. Again, if you're in the cryptocurrency, I'll close it out. Everybody's paying close attention to XRP right now. A lot of news is going to happen over the next few days when Trump takes office. So I'm going to provide another update next week. These are the plays I'm watching. These are the best values. Some other stocks, right? Fubo, I think most people know what's going on with Fubo. Then the Disney deal, stock popped up. CEO sold shares at $5.50, sold 85% of his shares. Now the stock's consolidating. You do have a gap fill right here. However, the VNU deal, Disney backed out of. So Fubo's another interesting play. For those of you that got back at COVID, I think it ran up to $30, $40, $50, $60 here. And now you're settled down at $4. So pay close attention to another high-risk play. Another play, Taiwan Semiconductors, another blowout earnings today with NVIDIA and AMD being their largest customers. AMD actually had a 2% beat on NVIDIA there, so a lot of downgrades coming in for AMD lately. Has a PEG ratio of 1 right now. Another very interesting play. Been following AMD for the past 10 years. If you're a long-term investor, you believe in AI, you don't believe we're in a little bubble right here, you think this is a normal correction, might be interesting adding some place here. I'm personally going to be waiting till the earnings call to see how their data centers are doing. We could be at the end of this market cycle, and I'll look at the VU or the SPY, and right now, close to all-time highs, very risky. The S&P is heavily weighted for these big tech companies. Would I add a long call right now? Again, not financial advice. Right now, I'm staying wary. What looks better to me is the Russell 2000. I know a lot of these stocks are not profitable. However, with interest rates, I expect them to come down. I expect a lot more layoffs over the next quarters. That will affect inflation. Inflation should come down as the consumer, it's not buying goods and services. So you're about $20 off the all-time highs here for the last year or so. And this has significantly underperformed the S&P, right? Has no pricing power. However, very interest rate sensitive, and may have a good turnaround play, may fill this gap back up to 244 here. We'll see what happens when the new administration takes hold. And the last thing I'll look at is the NASDAQ. All right, so see my lines right here. So off the all-time highs, 538, came back down in this channel right here. This bounce right here is the CPI number yesterday, and looks like it got rejected right off my line, 518. And if you see a couple red days here, could head all the way back down to 494, or it could just stagnate here. The RSI got up there a little bit, yesterday. Again, patience. Don't predict this market. We need to see what's going to happen with the new administration. A lot more news that's going to be coming out over the next week or so, and I'll provide another detailed update. Hope you enjoyed. Please hit that like and subscribe button if you want all the financial updates. And thanks for joining.